Hey everyone, welcome to Smart Investing. So, first things first, today is January 21st, 2023. Markets are closed. It is 5:30 p.m. I'm going to jump into the first stock, ticker symbol HOPE. So, looking at these numbers, they're pretty weak. Market cap is respectable. Earnings per share is kind of weak as well. PE ratio, pretty cheap. Stock dividend is only at 56 cents. Dividend yield is at 6.56. So price book is telling me that it's pretty cheap. The numbers are bad, and looking at the chart for the year, it's pretty much downtrending. Last 5 years, also pretty bad. Close to new lows. And we're just going to move on to the analysis for the quant ratings. Highest rating is value, close to a 9, obviously because it's cheap. Estimates for their earnings have been lower ever since Q4, moving into Q1, and they even missed both estimates as it's going lower even into Q2 2023. Looking at some annual numbers here for the ROA, pretty flat ROE, pretty typical. Earnings, they are pretty flat. Margins are pretty good, actually. Pretty good margins. And they're not bad. Looking into the cash flow, we have, let's see if they're positive or negative. And let me see. So 1.68, 1.7. So they are cash flow positive, actually. They're cash flow positive, but based on the first page, the numbers, they're pretty weak. So for this final decision to add to a watch list, I'm going to say no. Do not add to a watch list, and we're going to move on to the next one. Next one is ticker symbol SAN, Santander Bank. Santander Bank, $56 billion company. We have the share price at $3.48. So earnings are pretty awful. 52-week high and low, pretty awful. Dividend is really lame, lousy, 12 cents a year. Can't do nothing with this stock just by looking at it. Really. It's just hard to believe this is a $56 billion company. I'd say it's because all of these shares are actually in the billions, not even in the millions, in the billions. So that is why. Price book, 0.62. So it's telling me that it's pretty cheap. Now we're going to look at some technicals. Looking at the technicals, it's pretty much breaking flat for the last 5 years. Let's see how they did for the year. It's gone up slightly, but again, it still remained flat. Even though the chart looks good, based on the price action, it doesn't even look like much. Highest quant rating is at 8.34. So with that said, obviously it's a cheap stock. But again, it's just not worthy of being a good stock or a good company. It's just not bad neither. I don't know, it's just a regular company, not doing much. Moving on to the earnings and everything else, we have here, I don't even have estimates for earnings. Then we have here looking at debt. 94%. Net margins pretty typical. Oh wait, let me do annual, sorry. Net margins pretty typical. Earnings pretty weak. ROA pretty flat. Pretty flat. That is higher than their peers, so it's higher than normal. Now we're just going to go to cash flow. Operating cash flow is at, let's see, you see this really hard downtrend. So something happened in 2020 where they earned a lot of money. Then the last 2 years, basically, it just got cut in half. So they went from 66 billion in operating cash flow to about half 2 years later. So definitely a really big drop. Want to see if they're positive or negative. So we have here, they're actually positive. Actually positive. So we're looking at about 13 billion in positive cash flow. They can actually afford a bigger dividend. I think that would entice people for the share price to go up. And they could definitely make new highs and definitely take advantage of that. And they're very active actually for their volume. But again, I don't think they want to do that. This company is just, it's not bad and it's not good. It's just, like I say, it's just a neutral company, not willing to do anything. And, they have the opportunity to do it with that cash flow. They can put that cash flow to work in their dividends. I mean, there's so many options when you have, cash on the sidelines. But unfortunately, this company doesn't seem like they want to move forward with anything. Seems like they just at a standstill or whatever. So for this company, I'm going to say no as well, based on these weak numbers. Yes, they have a lot of cash flow, but I want to see some news where they're investing in something, selling a piece of business where they made money. It's not like they're having cash flow issues anyway, but still, it'd be nice to see some forward moving action. Last stock up that I have is ticker symbol IBOC, International Bank Shares. We have here, looking at the first page, earnings per share close to a 5.6, pretty decent. 52-week high and low of difference of at least 10. That's good. Volume doesn't seem active. Market cap is respectable at a 2.8 billion. Dividend yield is at 2.8. Dividend payment is at 1.26. PE ratio is slightly undervalued. Price to book is telling me it's fairly valued. So, slight difference in price. So we're gonna look at these movements. I think it's because these big movements. So as we can see here, big whipsaw up and now it's coming straight down again. So looks pretty flat, really. It took that short-term uptrend. But again, that was only a $4 move. It's not a big move, but again, it's retracement to its 200 EMA. Now, moving into its 5-year trend, again, looking pretty flat, even for its longer-term trend for the last 5 years. So other than that, if I had to say yes or no, do I like the chart? I lean towards no. But if I had to give a final answer, I'd say I'm pretty neutral about it. It looks flat. So, I mean, it needs work. If it goes down, it goes down. I need further confirmation to see a trend. But again, based on the last trend, which was downtrending, yes, it's slightly uptrending, but this long leg down still gives it that confirmation that, there's still movement to the lower side. And then right here, that big drop as well. Yes, it's slightly above its 200, but it's just barely holding on. and this has been going on for at least the last 2 years. So, very, very risky stock and sector and price action to get into. That's not a risk that I recommend to anyone, even to myself as well. Moving on to the quant ratings, the quality is rated at an 8. Overall rating is at a 4 out of 5. I don't know why they rated it that. Quality would be based on the cash flow. Let's see if they have a cash flow positive. Look into that and jump right into that real fast as of right now. Want to see that. So let's see, 387 million. They're cash flow negative, so I don't see the quality in this stock saying that they're cash flow positive. There are other indicators and measures that Webull uses for their standards for the quant ratings, but I use an overall standard, again, because I go through all the numbers, not just, one or two pieces of information to come up with an answer to verify it. I come up with more metrics and put everything together. Again, there are certain aspects where I see fit, where it's different from mine. Webull has its own measures, and I have my own measures and standards. And then again, based on the core factors that I use for each kind of quant factor, I also, try to incorporate, the fundamentals and the technicals. Again, like I'm always showing alongside to back up the factors that I use for my quant ratings. So anyhow, negative cash flow and pretty much enough said. I don't have any earnings estimates here. It's not giving me anything. So I'm going to have to cross out that list. I apologize for that, but that's the data and research that I have for you, and that's what's being given to me. So again, thank you guys for watching. I'm going to say no to this stock as well, and I'll see you guys real soon. I have more videos coming up. Again, stay tuned for more videos. I have shorter ones coming up. So I'll see you guys real soon.